Hey, this is Brad Gill at NextHome Lifestyles. Welcome to another market update for the city of San Jose. It is June 27th. And the story for today is, I think we're hitting a balanced market. So what does that mean? Well, let's take a look and dive into our current statistics for single-family homes, condominiums, and townhouses across the city of San Jose. Number one, we currently have 1,047 units available for sale. Yes, we've gone over 1,000 units. Now, you may think that's a ton of units, Brad, because at the beginning of the year, you were like 500 units for sale. Keep in mind, last year, we had very little active inventory because the rate of purchase was so high. So we've definitely slowed down a lot as our interest rates have been gradually increasing, which has really deflated buyer affordability and buyer demand as well. So we're actually going towards a more seasonal number. So if we go backwards a few years, 2018, 2019, our active inventory numbers in the summertime, which is always our peak time of the year, seasonality wise, for inventory on the market, we're always usually well over 1,000 units. So buyers, again, if you're waiting for the most choice and purchase, this is it. But buckle up, because you do have to do your pre-approval first and make sure you're comfortable with the payments, the readjustment you might have seen if you got pre-approved at the beginning of the year. All right, number two, we're gonna check current demand. So pending properties is now decreasing. We're at 532. Compared to last week, we had 579. So demand is still dropping out. Not too surprising. School is out. Home buyers are probably taking some vacations. So buyers are sitting on the sidelines right now, primarily because, again, it's summertime. They're taking travels. Travel restrictions from last year have been revoked and removed. So everyone's taking those long overdue vacations and trips. And summertime is usually the best time to do it. Plus, some buyers obviously are kind of watching and intimidated by what's going on in the marketplace with rates. But just get your pre-approvals updated and rerun the numbers and get back out there, because right now it's peak time to find what you're looking for. Okay, trends. What are we looking forward to? So new listings over the last 7 days, we're up barely 3 properties. So we're at 276 units new to the market compared to 273 last week. Demand trend, we're definitely down, but again, down very negligible number. So 99 properties went under contract, compared to the week before when we were at 104 units went under contract. But last week's number, keep in mind, was down almost 30% from the week before. Big reason there is that's when we had the jump in interest rate from 5.2% all the way up to 5.8%. It's when all the inflation numbers came out and kind of shocked the market as far as what's going on. So what inflation numbers are those? Well, headline inflation for the month of May came out at a whopping 8.6%, while core inflation remains at 6%. So what's the difference? Well, energy and food prices are factored into headline inflation. That's usually the inflation figures that you're gonna hear during the news broadcast you're listening to. It's the most volatile because, again, it includes cost of gas, oil, energy, and food prices. Whereas core inflation strips out the really volatile prices and provides more core products and services, kind of gives us a little more accurate feel, but they're both really important for watching what's happening in the economy, obviously. So back to our statistical analysis on the market this week. Market expectations. So the number of properties that came off the market, either expiring, canceling, or withdrawn, stayed the same, 58 units. Price changes, we saw 301, which is up from last week of 275. So again, we are closing in on that 30%, which means we're hitting that balanced market. As I was telling you guys earlier this year, our price changes at the beginning of the year were under 10% of the market. Now that we're really hitting that balanced market for supply and demand, we're starting to return to normal. So that's when about 30% of the inventory does undergo some sort of a price change. All right, let's talk interest rates, because that's been the story all year so far, or at least in quarter two. 30-year fixed rate is up to 5.8%, higher than last week, of course, at 5.78. And last week is when the rate jumped over 0.5%, when the Fed came out and announced that they were going to increase rates by 0.75 points. What does this all mean? Well, historically, mortgage rates, long-term mortgage rates are just just under 8%. So even at 5.8%, rates, believe it or not, are still on sale. What do you mean on sale? They're getting expensive, right? Well, keep in mind if inflation is jumping up to 8.6% and core inflation is at 6%, but you can borrow money long term for less than 6%, then the lender who's lending you the money is actually losing money over the full entire span of that mortgage if inflation stays higher than what they're lending the money out to you at. That's why mortgages could be considered on sale right now, even though they continue to rise. So what does it hold in store? We'll probably see more rate increases as we head further into summer, more properties listed on the market or at least sitting on the market. So again, buyers, if you're out there, this is definitely your time. Get your pre-approvals updated, go home shopping, tons of choice out there. And that's it for this week's market update. Hope you guys found it useful. If you have, please like, subscribe. Otherwise, I hope to see you guys next week.